Hello everyone, good evening and welcome to Startup Central, the first and only daily show in India dedicated to startups and entrepreneurship. I'm Avan Dabash. Well, lots lined up and it's a jam-packed show for sure, lots of news bits, but let's start off with the issues pertaining to Walmart. In fact, the Income Tax Department is examining the taxation issues with regard to the payments that have been made by Walmart Inc. to various shareholders of Flipkart following that big acquisition of the e-commerce firm. In fact, the CBDT member Axilor Ranjan says that they have full details of the payment made by Walmart to different investors, and in some cases, the taxes have been withheld. They say that they are examining those issues right now. Let's listen in.
Already have full details of all the payments made by Walmart to different investors. In some of those cases, deducted taxes have been withheld. In many of those cases, taxes have not been withheld, and that's what we are examining right now. We have asked for those investors to give us the information and details to show as to why they were not taxable on these gains. That I think buses were always taxable. There is no doubt about that. So I think that would be just a reminder that they might will pay the tax in the advance tax installments.
Moving on, even as a cab-hailing major Ola is on an international expansion drive, they are aggressively fund newer areas of growth in India. In fact, reports suggest that SoftBank has offered to lead the $1 billion funding round, but the company founders aren't keen on it. Why is that so? Rahul Dayama has the details from Bengaluru.
Well, $1 billion is indeed a lot of money, but the Ola founders are not too keen because they don't want to recede their control over the company. In fact, over the last year, they have made changes to ensure that the founders have more voting rights when it really comes to major decisions of the company. So the reports are indicating that Ola has been eyeing to venture into new areas, especially the food delivery business, which they got in through by the acquisition of Foodpanda. It has been doing well, but they want to scale it and really supplement the operations that they have. E-pharmacy is also something that they are considering to roll out. So these areas would require hefty investments, and that's why they're looking at a funding round. While SoftBank has made the offer, it's likely that Ola will turn it down. They will bring in new investors to the board to ensure that SoftBank's current stake that really lies at 26% does not really exceed a little tad too more, because they want to avoid a circumstance where SoftBank will play a crucial role in future mergers and acquisition really. Because remember, SoftBank is also an investor in Uber, which is the world's largest cab-hailing startup, the most valued startup, so to say. And Ola is doing all it can to really guard its turf in a highly competitive market where even Uber has been investing heavily. Also, as you mentioned, this comes at a time when Ola has been significantly expanding in the global markets like Australia and the UK.
Thanks very much for giving us all of those details, Rahul. Moving on, let's get you the funding data then. This is from Venture Capital for the month of November. So a total of 40 deals worth nearly $320 million have been closed in the month of November. We have seen a dip in the VC deals this month if we compare it to what we witnessed in the month of October, where the deals accumulated to nearly $661 million. But there were quite a few interesting deals that took place. Urban Clap, for instance, $50 million, Goki raising $30 million, as well as Misho close to $50 million. In fact, we've got special guests on the show. Let's talk a little bit about the trends for funding in the month of November. Arun Natarajan of Venture Intelligence is with us, and Payal Shah as well of Axilor Ventures as well, now joining in on the show. Well, great to have you both on board. Just going to come to you then first up. Payal, I want you to highlight the angel funding because that seems to be a gray area for months now. Is it regulatory concerns on tax implications because several entrepreneurs have received tax notices and IT notices?
We think it's a mix of reasons. One is this angel tax, of course, which has hit practically every company which raised money in the 2014-2015 time frame. We suspect, the later ones will start getting those notices as well. But then there are also other reasons. I think angel investors are realizing that you have to build a portfolio, and some startups will do well, others will not. And so this experience of what this asset class looks like is now starting to become a little bit more obvious. And hence some angels may not want to take multiple bets across different sectors, and hence they move out of the asset class as well. So that could be one of the reasons. There is talk that demonetization was one of the reasons as well. So it's probably a mix of 3-4 different factors which has impacted angel investing.
Arun, let's get in your take on angel funding, because PayPal spoke about a host of issues. What's your take? What was to be robust activity? What do we need? Because now we're down to 17 deals.
In terms of angel, we can look at them in 3 pockets, from an analyst perspective. That is, the first pocket is really what were kind of called derogatorily the tourist angels. They seem to have, as Payal said, seem to have packed up and left this asset class. Now, it's very heartening that Axilor and family offices like them are getting into this segment, because clearly they have more resources to put and a longer runway to provide startups. So that is clearly the second segment which is looking strong, thanks to people like Axilor. The third segment is the angel networks that we look at, and there with this little bit of let's say flux, because for example, does it still make sense for entrepreneurs, especially in the B2C segment, to raise kind of 50 lakhs from 10 investors stitched together? Now that model seems to be a bit in question, and that's where the IAN fund and others are re-looking at that model. So we hope the dust settles down in the angel segment, including the regulatory aspect, and things come back, because clearly this is the most important segment in terms of deal flow to VCs.
Well, has Axilor toned down its pace of investments over time? What exactly is the investment philosophy?
The same continues for us actually. Given the investors that we have, we started out with the idea to back a certain number every year. We may, within our thesis, change some of the subsectors that we look to back, but the amount of activity continues to remain the same for us. We expect it to remain the same next year as well. I would say that one of the things that we have become more focused on is taking more higher ownership, and across the board all investors are starting to do this, where they realize that where you are finding companies that are doing well, it is as important to have a meaningful stake, and hence we've started becoming a little bit more ownership focused.
Arun, it's interesting that e-commerce and fintech is back as the hot sectors now. Which are the other sectors that you're seeing which have become hot picks for investors?
In November, we clearly saw, e-commerce come back. Clearly we talked about companies like Urban Clap and social commerce firm, Meesho, and then there was also Magic Pin, which raised a strong $20 million round. So e-commerce topped the segment, with 5 investments. Fintech was not far behind. Kalari Capital made 2 investments in the sector. Also, Ivy Cap Ventures came in with an investment in a P2P lending company called Lendbox. So these 2 sectors have always been, kind of topping. Quite interestingly, outside of GoKey, there were not too many health tech investments which kind of came into the fore in the last couple of months, and EdTech is actually not very visible as well. These were kind of replaced by 2 other sectors. One of them is interestingly gaming, with MechMocha and similar companies attracting funding. AI has really come into its own in the recent months, and that is clearly showing up in the November stats as well, obviously led by a strong investment in Engineer.ai. So this is basically the sector spread, which is looking quite healthy at this point.
Chatting with you. Thanks so much, Payal, as well as Arun, for taking time out and joining in, giving us a sense as to how we've seen the funding activity shape up for the month gone by. Take a quick break right here on the show. Coming up on the other side, drones are taking to the Indian skies. As the policy goes live, we'll get you more perspective when we return. back. This is Startup Central, and away from all the funding activity and to the exciting sector of drones. The new guidelines for the drones have come into effect from the 1st of December to foster tech and innovation in the space. The Ministry of Civil Aviation has opened the registration process for startups that want to operate drones. Let's bring on board Tanuj Bhojwani, lead at Digital Sky, who's worked closely on the policy front. We also have Ankit Mehta, co-founder and CEO at IdeaForge, that's a startup in the space, joining in to decode what exactly this means for the ecosystem. Great to have you both on board. Thanks much for joining in, Tanuj. Finally, some regulatory clarity on the drone policy. What are the changes for startups from now on?
From an ecosystem perspective, it's a small step, but a step in the right direction. Obviously, the meat of drone flying, autonomous flying, drone delivery, all your dreams of farmers getting pesticide sprayed, right now not possible. But if you've been following the news, the minister has been talking, the Minister of State Jayant Sinha has been talking about this coming very, very soon. Our expectation is that this comes early next year, maybe as early as mid-Jan, and then the industry should really light up.
Ankit, you're an entrepreneur in this very space. Would you agree that the bureaucratic red tape is largely off now that we have a little more clarity? Because some startups say that despite this, there are still concerns and issues that remain. Would you agree?
So I do agree that at least now there is a legal regime in which drones can be operated in the country. Albeit, like Tanuj mentioned, there will be a slightly limited opening up of the skies. As far as the regulatory environment and the regulatory hurdles are concerned, I know for a fact that they are being worked very, very aggressively on. But a lot of clarity will emerge in this month as everybody tries to register, everybody tries to go through the registration process. A lot of clarity will emerge. And we know for a fact that decision making is being accelerated very, very aggressively to try and meet the January 1st deadline for allowing operations in the skies. So we are positive, but let's see how it goes as the month moves along.
Yeah, we'll have to see how things go. But the question is, do you now think that investors will warm up to the space? Because prominent VCs have definitely preferred to shy away from this area for want of regulatory clarity. We know Infosys, back to you earlier on, are you envisaging more investor interest now?
I'm not certain about it because the core sector still remains a very hardware focused sector, and a hardware sector in general is a slightly tricky sector of investment in the country. Typically, investors do not invest in hardware startups very easily. But as far as applications built over UAVs and those areas are concerned, I think slowly and slowly greater interest will come. There has been a lot of early stage interest in this domain, but interest around large deals such as Series A, Series B, and those kind of deals will go up as the regulations open up further and further and the domain becomes more viable in terms of operations in the country.
Tanuj, we understand that that's not all. The government is also considering drone policy 2.0. What can we expect from that?
Right now, you need to have an operator in close contact with the drone. Once you take away the restrictions, the possibilities are exponentially more. Next would be delivery or discharge, which means that actual payload can be carried on drones and not just used for passive recording. This is actually safer from a privacy point of view because you can certify that this drone has no camera, right? But instead carrying objects around. So in many ways, drone 2.0 actually addresses some fears from 1.0. And the last thing we can expect from drone 2.0 is also a lot of the accompanying infrastructure, drone ports maybe, or areas where you get to fly safely, etc., will come in the second 2.0 policy, and which is why the minister pointed out this very special use case of organ transplant, right? And something like that would be enabled if you have the ground infrastructure like a drone port, you have dedicated air corridors, and you have beyond visual lines of sight flying.
So, Ankit, what concerns would you as a startup want the government particularly to address in the drone policy 2.0?
So, in terms of concern, the skies have to become significantly larger as compared to the very narrow space that has been currently allocated for drone operations. So, the sky has to become much larger. The ability to do operations at scale has to go up. And we understand that it will happen in a regime where there will be the requirement for us to be more stringent about how we create our systems, how we design them, and how we operate them. But we need to have a significantly bigger sky to be able to operate and fly and to truly unlock the value of the technology for various applications that require improvement in productivity, that require increasing the safety of several applications and operations.
Tanuj, he spoke about, opening up the skies, but there are still concerns around safety. They remain. Are they considerably addressed in the policy apart from the no-fly zones, and what more would you like to see on that front?
So the way this regulation is framed is for the specific context of India and our special security considerations in India. One regulatory innovation I want to point out is the concept of NPNT, or no permission, no takeoff. You may have heard of geofencing, where certain areas are not restricted to fly. In India, essentially, we have the inverse of that. Your drone is a brick unless you have the specific permissions to fly in a specific area which is being governed on the digital sky platform. So if your drone can't handle flying in windy conditions, it will not be allowed to fly. So a lot of safety concerns are addressed through a digital regulatory mechanism. Privacy concerns exist, and those will be addressed simply by sort of creating more red zones, etc., around sensitive installations. And in the future, we hope that the level of safety on a drone is matched to the task at hand. If you're going to be carrying a payload or carrying humans, you have to be a lot safer, a lot stricter regulations than if you're simply doing a survey with a foam aircraft, or if you're a toy drone, etc.
Would you agree that the Indian market is very different from established market, so that the days of e-commerce deliveries, all of that is still far away?
I would agree, because in general, what I have seen being part of a lot of the effort that is going on in creating the regulations and the recommendations that are going, is that the concerns around security are significantly higher in our country. The ground density in our country is much higher than what it is in several other countries, and because of that, the concerns around what will happen if systems don't operate or are made to a certain standard are significantly more heightened in India, given the overall security environment in the country and the lack of enforcement in so many other areas. So therefore, it is bound to be that the areas which are relatively less known or familiar will be slightly more under stretch or stress. So I do agree that there are different concerns as compared to most of the other markets where these devices have scaled up extremely rapidly. But there is definitely a possibility of approaching this in a calibrated manner. And I think the next round of policy should address that calibrated fashion, in which we'll open them enough for us to address the security concerns while we are being able to operate in a significantly bigger sky.
Okay. Tanuj, while we seem to have started late from a policy perspective, how do we fare as compared to some of the established markets like the US, etc.?
So I want to start this off with a simple story about Jeff Bezos, and in 2013 he went on this show, a popular CBS show in the morning, Good Morning America or something like that, and said in 5 years we'll have drones delivering objects to your home, right? And Jeff Bezos, right now richest man in the world, was wrong about this, because air safety is hard. It's a very, very hard problem. Where are we with respect to developed markets? I want to point out a few things. One, we may have started late, but our ambition for drone policy 2.0 is much larger than even most other developing nations. So it's a mixed bag. We are not yet there, but very soon we will be far ahead of these people. We have a digital regulatory mechanism in place, which means that once the government thinks of a policy, actually enacting it and doing enforcement is going to be very, very fast. So you can expect a rapidly evolving policy, which is a lot better news than a policy that is better than US today. Because in 3 years, if it's not updated, we'll be behind again. So in short, my answer is we've built in the mechanisms to enforce and to evolve, which is much more important than where we are today.
Ankit, now Tanuj just threw light on how the Indian market is different from some of the more established markets like the US, etc. Can you, being in the space, point out 2 or 3 things that set the drone market apart over here vis-a-vis the other countries?
So I think one of the things is that in India, the procurements as far as the consumer space are concerned are not going to be as voluminous as they are in, let's say, a country like US or Europe, where people buy expensive toys for their hobbies as well. So from that point of view, India is going to be a relatively less penetrated market from that perspective, but there is going to be a significant amount of penetration in our country when we are looking at deploying UAVs for a lot of commercial and enterprise and precision agriculture or safety and security applications. The regulations were open to allowing them to operate, and second, the need is very high and the environment in the country sort of mandates that the induction of this technology happens first there, and it proliferates increasingly into various other areas such as improving the yields in agricultural environment, improving the ability to manage insurance in order to use it for various applications such as oil and gas pipeline monitoring, power line monitoring, inspection activities in large industrial complexes, etc. The other place in India, the issue is that in India, typically the overall enforcement level is very different as compared to other countries. In India, people are more used to doing something which is not mandated in law than doing what is mandated, and that makes the environment slightly more difficult, and therefore we see applications such as NP-NT come in place, which doesn't exist elsewhere in the world, where enforcement is built into the permissions piece and will be controlled through the manufacturing and type approval of the manufacturers.
We'll let you go on that note, Ankit, as well as Tanuj. Many thanks for joining in and giving us your perspective on the new drone policy. With that, we're completely out of time. Thanks for watching.